Hi, I'm Michael Yardney, and when we look back 12 months to October 2008, we were at a terrible time in what since became known as the global financial crisis. Financial markets all over the world were falling apart. The bottom had fallen out of our share market. Major financial institutions were being propped up by their respective governments, and people were predicting that the Australian property values would fall 20, 30, some said even 40% in value. Consumer and business confidence at that time was at an all-time low, and the media was full of doom and gloom. Every day a new bogeyman popped out and scared us. I know I didn't enjoy reading the newspapers or listening to the news. There was lots of scary stuff around. Remember those times? Well, fast forward 12 months to today, and our economy's on the rise. Confidence is bounding and property values are booming. So back to my original question. What has changed, and particularly what has changed to make our property markets perform so well? With regards to property, not a lot has changed. If you look back at my regular property market commentaries, I never suggested things were going to be that bad in our property markets. Now, I'm not trying to underscore the significance of the global financial crisis or the potential threat that there was for our economy, but the Australian property markets were never going to have a huge price decline, not like some commentators predicted. This time last year and early this year, I was one of the few voices in the media saying things weren't so bad in property. On the other hand, many commentators and economists were comparing our property markets with overseas, particularly with what was happening at the time in the United States, Europe and the United Kingdom. Others were drawing parallels with what happened in Japan in the 1990s, when property values tanked and remained flat for years and years. What these commentators failed to observe was that overseas, in these countries, they had a huge oversupply of properties following a massive building boom. In contrast, Australia had a huge population boom and an undersupply of properties. While many commentators have changed their views over time, in fact they seem to change them every time a little bit of information comes in, if you look back at past issues of Property Update, you'll see I'm not changing my view on where our property markets are heading. You see, I take a long-term perspective of our property markets based on the underlying fundamentals, because those are what sets the direction of our property markets. Now, of course, a number of things have changed, and one of the main changes is that we are over the worst of the global financial crisis. While other countries have suffered, Australia's missed out on what could have been financial disaster because the Reserve Bank acted quickly and dropped interest rates by 4.25%. The official rate went from 7.25 to 3%. In my view, this was the main factor that shored up consumer confidence and our property markets. Now, while many people suggest that it was the first homeowners grant that saved our property markets, I'd argue that it was the lower interest rates that initially helped many first homeowners, then established homeowners, and now investors get back into the property market. Looking back at previous property downturns, the same sequence of events is occurring all over again. Initially, there's a surge in first homeowner activity. This started in Australia in the first quarter of this year, 2009, and that helped stabilise home prices. As interest rates fell, and with property values stabilising, the next step was that many established homeowners saw it as a terrific time to upgrade their homes, and in turn they started to drive up property prices even further. And now investors are returning to the market. Yes, the property cycle's moving on, but as always, there are still some doom and gloom merchants out there saying that now that the first homeowner grant, or the boost, has gone, property values are going to crash again. Once again, they're forgetting the same fundamentals that helped prop up our property markets in the last 18 months or so. And those same fundamentals are going to underpin property values in the long term because, as I've already said, very little has changed. These fundamentals include an increasing population, changing demographics. There's more 1 and 2 people households, and this means we need more buildings, more dwellings for the same number of people. In fact, we need to build about 170,000 new dwellings in Australia each year. The problem is, currently we're only building about 130,000 dwellings. which means there's a large deficiency in properties. Now, whilst lower interest rates and the first homeowners grant has definitely encouraged a lot of new construction, it's mainly single dwellings. Currently, tight lending criteria has meant that developers just aren't able to build medium density and high density apartments. This lack of new rental properties, together with the growth in the 20 to 24-year-old demographic, means our vacancy rates, which are currently at historic lows, and rents which are currently still rising strongly, is going to continue. In fact, this situation is unlikely to improve for 4 to 5 years. Why is it going to take so long to clear up the vacancy shortage? Currently, builders are just not building enough apartments. In fact, statistics show that there's a 40% drop in activity in medium and high density construction. The banks are just not lending them the money. But eventually the banks will start lending to developers again, but this probably won't be until well into next year. And then there's going to be the normal time lags involved in getting large developments on stream. All this means is it's going to be quite some time before our vacancy rates improve. What about the argument that all the first home buyers are dropping out of the market? Well, today, affordability for properties is the best it's been for 10 years or so, and it's at the level, and loans, new finance is really back at the level that they were about 2 years ago. And this is what I call a leading indicator. People are taking out loans, of course, before they buy properties, and all these new loan applications point to really strong future buyer demand. Sure, the first homeowners are out, but they're being replaced by people upgrading their homes and now by investors returning to our property markets. So if you want to increase your wealth through property, the prospects for the Australian property market are the best they've been for a long, long time. But you need to buy the right property, one that will increase in value above the averages, and number two, you're going to need to structure your finance correctly because things are changing and you definitely have to allow for changing interest rates, rising interest rates. Now, as our property cycle moves on, I'll keep you up to date with changes that are happening in future newsletters and future market updates like this, but it's probably appropriate to remind you that in changing times like we're experiencing, no one can help you quite like the team of independent property investment strategists at Metropole. Remember, we have no properties to sell, but we've got access to every property on the market. So if you want to find out a little bit more about what's happening in your local markets and what our research suggests in store, please join us at a free property briefing at our offices in Melbourne, Sydney or Brisbane. Just click on the link below and reserve your place. Also, if you'd like to educate yourself, be one of the first people to buy the fully updated new 3rd edition of my best-selling book, How to Grow a multi-million-dollar property portfolio in your spare time. Over the last 4 years, my book has become a property investment classic, and this new edition will give you updated strategies to take advantage of the new property cycle. Please click on the link below for more details and to order your copy today. Now, if you want to keep up to date with my regular tweets about property, also please follow me on Twitter. Just click below. I look forward to bringing you another property market commentary in 2 weeks' time.